And I'm very happy to see a couple of familiar faces, but also some new faces and the excitement in the room for the topic of venture capital. Marco called me some time back, still last year, and said, well, we realized that you have a pretty international portfolio. Is this just coincidence, or is there a structured approach behind this? And I said, no, this is a bit more than coincidence. Of course, we used a very structured approach when we built up our portfolio. And he said, well, would you be interested to share this at our conference? And I said, well, very happy to do so. So here I am. I know I'm standing between drinks a bit later, and the weather out there is wonderful. So I will stay in time, and we will have drinks afterwards and exchanging further on venture capital. So, my name is Bernhard Mohr. I'm in the venture capital business for some 15 years now. I'm with Evonik since 10 years. Here you see a couple of facts on Evonik, our parent company, a Germany-based, internationally operating specialty chemicals company. Last year, we posted around about 50 billion euros of sales, a very profitable business. And very important here, and this also leads into our topic, we have 80% of our markets, we are a market leader. So in order to be a market leader, of course, you also need to be an innovation leader. What you can see here is we spend significant amount of money in in-house research. So very capable people here doing research, a lot of patents coming out of this. We are also focused on what we call next generation solutions. So thinking ahead. And some 10 years ago, Evonik said, well, we have all these great people in here, but of course we want to also tap into external research. And this is what Evonik Venture Capital was founded. So where are we to date? To date, we have 400 million euros under management. And I can tell you this is brand new information. This is the very first slide. I have this on as the last 150 million were just announced this afternoon by our board. So yesterday, 250, and we just added 150 million today. We operate with 15 investment professionals globally. We see what we call 800 relevant companies. This is what we insert into our database. We probably see 1,300 companies a year. And I'm very happy. Paolo talked about this. Philip talked about this. Also, we heard it in the presentation of Steel. Cooperation is important. Cooperation is also important for us. And besides our investments, we set up roughly 25 corporations between startup companies and our parent a year. And to date, we have done 46 investments globally. We are also now starting to exit companies. We have had 6 exits so far, 5 of them profitable. So, basis for our investments, we invest from seed to growth and later stage. Typically, we would start with an initial investment of 3 million. We could invest also in subsequent rounds. So follow-on investments, of course, are also part of our scheme. We can do up to 50 million. We are active globally, meaning Asia, Europe, Israel, and North America. We are a minority investor, typically up to 15%, and we are a very active investor. So typically, we take positions in boards as either as a board member or as a board observer. So this is our current portfolio. You can see it. Innovation is global. Innovation of relevance for Evonik is global. So this is our landscape. You can see Europe, Israel, probably accounting to 50% of our portfolio, North America and Asia Pacific, and the strongest growing portfolio region for us is the Asia Pacific region. I won't go into details, but of course also a very strong strategic rationale here. And our investments are geared to support Evonik in what we call the Evonik growth engines and innovation growth fields. So these are areas where we also have over-proportional growth ambitions as a company. So let's go 10 years back, 2012. I think 10 years ago, the venture capital world was a bit different than the venture capital world today. If you look on the number, I think this year, There are a bit of deviations, but I think everyone would agree that roughly venture capital investment in 2021 was in the order of magnitude of 700 billion US, maybe a bit more, maybe a bit less, but the number 10 years ago was 60 billion, so 1/10 of this. Investment areas, medical devices growing up strongly, mobile sector very strong, internet already going down, and green tech also on a decline here. So very interesting also to see this. At this point in time, we had 288 active CVCs. I understand from Jim Mawson and his analysis, we are probably now at 1,500 CVCs that are active globally. And I pulled out some of the investments. Snap, Square, well, let's start with Square. Square raised 200 million, which was outrageous. I think people said, well, this is great. I just looked up market cap close to 50 billion today. Another example is Snapchat, 8 million finance round, which we saw it as well. That's a significant round at a money valuation of 50 million. The company, as of today, is worth 37 billion US. So this was the world 10 years ago. Also, if you look on the geographic distribution, North America, 2/3 of the market, and Asia, still somewhere around 10%, but we saw a pick-up in Asia. So when we started our activities in 2012, we said, well, what is our strategic approach? So we said, of course, we want to focus on new technologies and business models to complement our own innovation activities. We want to do this in a focused way. So focus for us at that point in time was do it in Europe, do it in North America. We said, well, we want to be as professional as possible. So an own organization, Evonik Venture Capital is our own legal entity. And we want to have also a governance model that is as close as possible to financial VC. And we already talked about this team. We realized early on, in order to be successful in the industry, we need to have a very professional team, people that have a strong standing and expertise in chemistry, but also people that have a background in private equity or venture capital. What are the challenges? The challenges, of course, was how can we ramp up our deal flow? How can we see as many relevant opportunities as fast as possible? Today, I think there have been some great insights into ecosystems. Of course, also we realized that ecosystem and access to ecosystem is extremely important for us. And connection to potential syndicate partners. We all knew early on we need to invest in syndicates. So how can we find the right partners there? And of course, I think we talked about culture. And this also, I think Paolo said you are at 60%. And we realized that we're starting probably at 20%. And 10 years ago, people still venture capital in many people's mind were like, oh, these are the people with the garage, and a couple of years later, it's a double garage. So, of course, this is also the mindset we had, at least with some colleagues in our company, despite having a very strong support from the board. So this was what we knew early on. This would be the challenges for us. So let's forward a couple of years, 3 years later. This is the portfolio we built in 3 years. So we realized we need to do investments as soon as we could. So we built up a portfolio of 12 companies until 2015. And I just saw Marcus. Is Marcus still there? So we like Emerald. Marcus, you see, we like Emerald so much. We even put you here twice on our global roadmap. So what you see in the first line is the direct investment we did. Second row is the fund investment. So we had an approach where we said it is important to have fund investments. At the same time, we also want to have direct investments. And what were the key findings after 3 years? First of all, I think we had a fund strategy. We thought that funds would be important for us, and it turned out that funds really very important for us. So they provided us with strong, high-quality deal flow, but also good insights in the industry. We said probably the first 3 years we are not leading a deal, but it turned out for whatever reasons, we probably led 50% of the deals we closed. So of course, this also gave a strong confidence to the team to say, well, we can do it. It's not only that we can piggyback, we really built up the expertise pretty fast to also lead deals. And what we also saw, despite the strong focus we had on Europe and North America then, we saw a deal flow building up also from Asia. At that point, very opportunistic, but we said, well, maybe this is the right point in time to expand also into the Asia Pacific region. So this is the view now we had, and this is around 2016. So by then, the venture capital world, the volume had doubled. So we're talking about roughly 120, 130 billion of venture capital invested there. And we saw China, Asia Pacific is ramping up significantly, about 1/3 of the money and also roughly 1/3 of the opportunities now taking place in Asia Pacific, and Asia Pacific being predominantly China. So whatever we saw in Asia Pacific, 80% was China. They had an all-time high then in excess of 30 billion. Still a couple of later stage deals that maybe falsified the picture again. But we saw this is now a very dynamic market. And this is a market where we also saw true innovation. This was no longer a copycat. So we saw really interesting, relevant innovation also arising in Asia, in particular in China. So we said, well, this is a relevant market for us. This gives us insight. IoT is a topic, digital is a topic, but also sustainability, relevant opportunities there. And of course, while we realized early on that Asia Pacific predominantly is China, we also were aware of the fact that there are also relevant opportunities outside China, but to a much lesser extent. So this is when we decided also to start with a focused approach in China. And we essentially repeated, but in an adjusted way, what had been worked for us very successfully in Europe and North America. In order to learn about the ecosystem, we did 2 fund investments that helped us to put our name here on the map, to learn rather quickly, to ramp deal flow. And of course, I can say this a couple of years later, now we are also getting very sustainable financial returns. So we also luckily did the right fund investments that did not only give us strategic, but also financial returns. 2 years later, we went the next step. We said, now we know enough about the ecosystem. Now it's the time to also establish a local presence. So, and we did this with a local, a Chinese gentleman. So we said, well, of course we could send an outstanding high potential from Germany to China, but this is probably not going to work. So we need to do this with a local, and we found a person that already was in our organization that had a strong interest, and we put him to Shanghai to start and build up our venture capital activities, which he did in a great way. And this was also the time where we started to do direct investments in Asia. And a couple of years later, Erning Sao, the colleague in China, he really made a big impact, and Global Corporate Venturing said, well, this guy is great. We even name him one of the top 50 rising stars in the industry. So based on this, we grew the team to now 14 members. We intensified our direct investment activity. And of course, we did whatever we could to help the team to build up recognition. The way forward is we will continue doing direct investments. We are also now focusing on investment opportunities that later on could turn into M&A opportunities, and now being very stable in Asia or in China. We will also said, well, now it's also the time to look left and right and look at other countries in Asia that could be of relevance to Evonik. And I will get to this in a second. There's another ecosystem, and we heard Philip talking about the importance of also being active in Silicon Valley. TDK, of course, said Silicon Valley, Boston is for us important, but we always realized this is a a very important but also not too easy to access ecosystem. From Germany, there is a 9-hour time difference, but even for our North American team that was based on the East Coast, it's 6 hours to fly to San Francisco. It's a 3-hour time difference, and in order to be successful in this ecosystem, you need to do more than flying in every couple of months or having a phone call. So we said also, if we want to be successful in this ecosystem, we need a bit more, and this a bit more is probably a local presence and a way to sustain our local presence. So this is what you see today. The left-hand side of our investments. We built also a direct portfolio now, an increasing portfolio. This is essentially what we added over the past 2 years to our portfolio. On the right-hand side, you see the Eastern Belt. These were essentially many of the companies we added to our North American portfolio in the first place. So Silicon Valley, as I said, EVC at that point was a well-established player on the East Coast. Silicon Valley for us was still a bit of a closed shop, and we said we need to build up a physical presence in order also to be successful there. And of course, we realized that a couple of our friends and peers are already there and are being successful. You can read it here. I already referenced Bosch, BASF, E.ON, Google, and some more. So we used a 3-pillar approach to also establish a strong presence in Silicon Valley. First pillar was an affiliation with the Silicon Foundry, and I'm sure most of you do know Silicon Valley Bank as the most active supporter on the banking side for startups. And Silicon Valley Bank said a couple of years ago, well, we know so many people, we know the ecosystem. Maybe we can also expand our business model. So they created a subsidiary, which is the Silicon Foundry, which is a network based in Silicon Valley. They have some 20 members. They have a physical space, and they have excellent access to startups in the space. So for us, this is, I would say, the equivalent to a fund investment. They can facilitate very strong introductions in the ecosystem. Our second pillar was a fund investment in a deep tech fund. It was a small fund, but very convincing for us was these people, they really wanted to have us. So it was not like one of the big funds where you need to beg to come in there. They really wanted to have us. They wanted to work with us. They see the value of working with a very strong technology company. So we added another fund investment to our portfolio. And the third one, of course, and this is the key, is adding one person here on ground. And again, we said there's probably a little value add to take an Evonik colleague and putting him or her there. We need to have someone who is a native to this ecosystem. So we found a gentleman, Tom Gwynn, who is active in this ecosystem, who is a venture capitalist since 8 or 9 years, and we could win him over. And this is now our setup also in Silicon Valley. And as I had shown you, from the investments we had closed recently, we think this is now also the right approach for us, and it works very well. So step 4, and this is the final content slide I will be sharing with you tonight, is, of course, there are other important regions and ecosystems, and I just picked 3 of them and explain the way we as Evonik decided to become active in this ecosystem. Israel, we did our first investment in Israel already in 2016. This is an ecosystem in our perception where personal relationship is very important. So of course, I think it's easy again, flying from Germany to Israel. This is close, 3 hours, you can get there anytime. But the personal relationship matters a lot. And we waited a long time and said, now we want to become active there. And we do manage this with a regional, with a local venture partner who helps us there, helps us to be successful in this ecosystem. Singapore, we concluded our first investment in Singapore last year. Some of you might be familiar with the specific market dynamics in Singapore. I would describe it as a US-type ecosystem. Many of the opportunities are rather early stage that we see. Of course, the market in Singapore is not as such that they have a huge local market. So companies are being seeded there, and then they go abroad to grow. We do have a very strong R&D hub in Singapore with very entrepreneurial people. So we said, why don't we link this together? So we have a close link between the venture capital ecosystem in Singapore and our local R&D hub there. And our latest addition, and this is, I would call it work in progress, and we also heard a bit about Japan before. Here we will do our first fund investment, and we are about to close this. Japan, and I had the pleasure to also live in Japan many years ago, to live in Japan for 6 months. So a wonderful country, great people, but also very unique. I would say very unique from a language perspective, but also unique from an etiquette perspective, and the way we approach Japan is we have a very strong local scouting team in Japan, and we have a close cooperation with them, and it will be the local scouting team and that will be taking care of our investment activities, deal flow activities here in Japan. Maybe just one thing to know, as I think one of the challenges we are having with this fund, I think everyone speaks very decent English, but we were still surprised all the documentation of the fund were in Japanese. So I think still a very international setup, people international, but all the documentation still in Japanese. So to summarize here, what are our key learnings from a global venture capital organization? First of all, we had discussed this in our conviction, it's a combination of strategic plus financial factors that are critical for success. So commercial success is the key value in order to build strategic success on top. And you need to build reputation there also from successful exits to provide access to investment, to attractive investment targets. Second thing is professional corporate governance structure. You need to have a clear investment thesis and an efficient decision-making process. This is why we early on insisted to say this needs to be a separate legal entity. And of course, towards your portfolio companies and towards your co-investors, you need to show that you have a long-term and reliable investment strategy. Everyone would agree to say, well, people are key. Talking as investors, we typically mean people in the management are key. But we also learned over 10 years of investing in venture capital that also co-investors also pick your right partners from your co-investors. They are essential. So you need to be aligned with your partners. And also you need to build a very strong network in order to be successful. And final point I want to make here is you need to adopt your investment approach to the individual regions. There is no one fits all. So that means in our conviction, in order to be successful, you need to build a strong regional presence and a strong team. You need to understand and act according to the regional investment specifics. And the final point, and I think this is probably very easy to say, but for a German corporate, not always too easy to also implement. Of course, it's not only to put people in the region, it is also to delegate decision-making power to the individuals and to the organizations you have in the regions. And this is the final slide, and I can only confirm and reiterate what had been said here a couple of times. This is a people's business, and it is important to have a strong team in order to be successful. And this is why I want to end my presentation with our global team, a very diverse team in thinking, and for us, the team, as I said before, this is the basis for success for every venture capital unit. Thank you.
Okay, Bernhard, thank you very much. That was a great presentation, and obviously very impressive how you guys built that over the last 10 years. So now we're going to go to roundtables. Yeah, everyone knows kind of where to go here. Tables 1, 2, 3, and 4. You can pick your table, and we'll have some more discussions on a little bit more in depth in the roundtables. Thanks.